Good afternoon, and thank you all for joining us today. My name is Ray Mulry. I'm a partner and co-head of the M&A group here at Garfunkel Wild. I spent a significant amount of my time in the post-acute care space due to my background. I left Garfunkel Wild in 2010 and spent over 11 years at an organization that operated 120 skilled nursing facilities, skilled nursing and assisted living facilities, and related businesses across the country. I rejoined Garfunkel Wild in 2022, so about 3.5 years ago. And I've really enjoyed being back in private practice and leveraging my in-house experience for the benefit of my clients. But it was at this organization that I met my esteemed co-presenter and good friend Alex Paley. I've had the pleasure of working closely with Alex for my entire time in-house. Alex is one of the most knowledgeable people I've ever encountered in long-term care operations and management, and also one of the most passionate. Alex and I have worked together very closely on transactions all across the country involving hundreds of facilities. And Alex's experience in this space and his operational knowledge are truly unparalleled. I'm really happy to have Alex here with us today, and I think he's going to provide a lot of great insight. So welcome, Alex.
Thank you, Ray. That's very, very kind. I don't know how to quite respond to that except saying you're full of malarkey. But no, I appreciate the kind words and thank you so very much. It's very kind of you to say. It was a pleasure. It is a pleasure to work with you, and Garfunkel Wild is such a wonderful firm doing important business in an important industry. So it's a pleasure to be here today. Thank you so much.
Great. Well, appreciate that, and let's get started. So we have 30 minutes today with a hard stop, and we want to make sure we get through the material. We're going to talk at a relatively high level, and just go through a few kind of trends and topics and things that are relevant to people that are looking to transact in this space. And we're going to touch on the current landscape of long-term care transactions, including valuation trends. We'll talk about some regulatory updates that could affect transactions and pricing of transactions, and then kind of the themes that will be in the first two segments, we're going to try to tie together to give you some suggestions on how to approach diligence, how to improve diligence, to reflect kind of some of these trends that we're seeing in the market.
Ray, if I can jump in there 1 second, what is one of the things I'd like to accomplish today when we have our discussions with diligence is make a clear demarcation about what I'll call standard or foundational due diligence, which is the typical diligence you would find in a merger or acquisition between a capital partner or two entities looking to acquire long-term care assets. Foundation, incremental or contemporary diligence are some of the newer things that I think need to be particularly focused on by the participants. Not that those things were not important before, and this will make more sense when we go on when we move forward. But I think today more than ever, the awareness of certain things like the nuances and complexities of value-based care, the shift in acuity from the skilled nursing world to the assisted living world, all have trickle down effects to the every element of the M&A world. So I just wanted to throw that in as we kind of set the stage for what we're going to be talking about.
Alex, that's perfect, and that's exactly what we want to touch on. We want to not talk about everybody kind of knows what their standard diligence checklist is. We want to talk about what how you approach what we're seeing as trends in the market. So I think that ties in perfectly to what we want to accomplish. So thank you for that.
Sure.
Okay, so starting off, the sector outlook for senior housing, for skilled nursing, assisted living, the demographics of the United States, the population is aging, and it's aging rapidly. According to the U.S. Census, the 80-plus cohort is expected to grow 36% over the next 10 years. At industry conferences that I've been at, I know you've been at, and Alex, they always talk about the silver tsunami, and they put up charts to show the explosive growth of elderly population in the United States. So, at a macro level, we and many others feel that senior housing is going to be a significant growth area, and will continue to attract investment dollars, as it has. And so we think it's a good space to be, and that's going to continue to increase, as we move forward.
Yeah, I mean, it's to your point, Ray. I think it's just everybody, presumably everybody knows the high level points on this, that the population is growing. As you said, it's growing by large percentage points. And as they grow, the demands of the populations, in addition to their increasing acuity, is going to put tremendous pressure and opportunity on the assisted living, as it has already, for the assisted living market to grow. And you're going to see a shift, from a continued shift, of course, from the SNFs to the ALSEVs, as you've been seeing, as those aging and subsequent acuity trends grow as people age in place.
And with assisted living, what I think I've heard and I've seen is that the acuity of the residents in assisted living has been increasing, and meaning that there's greater medical complexity and a need for more care than in the past, and the assisted livings are actually keeping people longer, and
That's correct.
managing more complicated comorbidities and things, and kind of keeping them from moving into skilled nursing until later. Is that accurate?
That's very accurate. The U.S. population growth they projected from NIC data, or U.S. Census data rather, between 2010 and 2029, they expect a 12% increase in the overall U.S. population growth. The aging population growth is 68% in that same time, which means 57% of the total 12% are 75 plus. Now we can all do the math on that. That's a huge increase in terms of where they're going to be. But coupled with that fact, people are living longer, of course, but they do have the acuity needs. It all comes back to demand. So I think our task today is to say, okay, given that those base set of statistics that we're all aware of, and we're just quoting them specifically, but those trends and forces, what does that mean for our job as participants in the M&A world? And when I say our job, I mean buyers, sellers, capital partners, and so forth. How does it impact the specific energies and focuses and priorities of those of us involved in the M&A world?
Right. And another trend that I know we've spent a lot of time on, Alex and I worked together in implementing iSNPs in a couple of southern states with portfolios that we previously worked with. But Medicare Advantage and iSNP is something that is increasing in skilled nursing. These are capitated programs that require a lot more care management from the facility, and really financial risk to the facility. This is something that, again, will, depending on the market that you're looking to enter, whether these programs are there. They're not in all geographic areas yet, is my understanding, but they are growing. The penetration is increasing, and it's something that you have to be aware of. Can you speak? I know you have a ton of experience in this. Can you speak about how this trend is going to affect occupancy reimbursement in skilled nursing?
Absolutely. Let me expand that to long-term care in general and tie some of the themes together. Um, the institutional special needs plan, also known as an iSNP, in its simplest form, is a model where the provider is the payer. So, given that element, certainly it's understandable that there's a lot of scrutiny and regulatory oversight into these different models. Now, they have been proven to be a cost-effective way of managing cost, access, and quality through the use of nurse practitioners and so forth. And there have been a lot of different players in the iSNP world over the last years, and it has resulted in a large proliferation of participation in the iSNP world. There was a lot of growth up and through 2023, 2024. There is data that shows in 24 and into 25 that has slowed down a little bit, still growing, but at a slower rate. I don't believe that that's going to slow much more considerably. I think what we'll see is a shift in the type of players and models that are out there. So, for example, there are a lot of different companies that were doing this privately. You and I, of course, were involved with a model that was partnered with a more prominent player as operators ourselves. And then the biggest model that I can see now is the development of the regional models. For example, there's a very well-known iSNP in the Midwest called the Hoosier iSNP. It's made up of 5 different companies, Trilogy, Brickyard, and others. And it's proven to be, it looks good. It looks like there's a lot of focus, and I think they're going to be trendsetters in terms of this strength in regionalization of the iSNP. The iSNP are one example of, a prominent part of the value-based care world. and we'll get into some more specifics when we talk about the diligence process itself, but it's also to be aware of other models, including ACOs and so forth. I think the overarching theme here, and I'll try to segue a little bit now to a touch on the diligence world, is when you're looking at when diligence is being done, excuse me, or as an operator in general, the mindset the mantra has been for years coming out, but we're seeing it now in a manifested way. Long-term care players have got to see themselves as part of the continuum in a way that they haven't before. They have to see themselves, and hopefully by their partners, be seen as strategic partners on the continuum because of data sharing, because of interoperability, operationally and data-wise, through care management, of course, through therapeutics. So the acute care partners, the hospice partners, the home health partners, the SNF and ALF partners, the pharmacy partners, the behavioral health, the physician services, they're all linked together in a way that they have never been before. It's been talked about and talked about, ad infinitum, but it's here now. And so as we see that and we see the growth of ACOs, and certainly that doesn't mean that every SNF in the country is being affected by it the same way. There's certainly a geographical nuance to it and where it's occurring and where it's stronger. The ability to understand your strengths, weaknesses, and opportunities as you commence to participate in that continuum is critical. And it's critical for you to understand how you can leverage those opportunities, be part of those opportunities as you move forward through the M&A world. Your ability to leverage data, your ability to communicate and participate with partners is absolutely critical. And that goes to the incremental due diligence that I was referring to at the beginning, or that contemporary due diligence, if you will, beyond the basic standard or foundational due diligence. An entity's ability to see, pro forma, predict, understand their place on the continuum, and be able to make themselves attractive to other partners on the continuum is going to be a critical factor going forward. Sorry for that long-winded answer to a very,
No, that's a great
very
explanation.
precise question.
And I know that the goal of this, and having all the different constituencies aligned, and having the skilled nursing facilities, be incentivized to provide care, to reduce expenses, is intended, and hope is expected to improve care and to reduce costs. I mean, isn't that the overall goal of these programs?
100%. I mean, of course, it's the triad of cost, access, and quality. But first and foremost, we are care providers. There was an interesting quote that I read in a trade publication recently, and this was from a Rethink conference from a few weeks ago. And the quote was, "It's all about people, culture, and strategy." And that was from an operator talking about their relationship with capital partners relative to their employees, their associates, and so forth. So those foundational elements have never changed, and they never should change, not in our industry. We have many stakeholders in the industry. We have our families and our residents, our referral sources. As an operator myself, we of course had to contend with all those. You remember, Ray, all those important stakeholders with simultaneous needs, our associates, our investors, the regulatory world, in addition to our families and residents and referral sources. But the ability to do that, and the ability to do that, and the need to do that certainly hasn't changed. But there's a new element now in terms of innovation, whether it's technological innovation, whether it's data collection and understanding your data, whether it's leveraging that data. But in the end, it always goes back to care. It always goes back to the ability of providing the best care to the residents. That has and always be the best strategy. We're just proposing that in this modern world, there's newer and better, hopefully better ways to do that with a tighter pool of dollars. And then, of course, we want to translate that when it comes to the M&A world into the diligence process and so forth, in terms of, does this deal make sense, depending on your perspective from the table. But the care element always has been and always should be at the top of the list.
So as much as things change, the bottom line remains the same, I think is a good way to kind of sum that up.
Yeah, it's a great statement, because that's why, if we segue into the diligence element now, if you're, what I would submit to, again, capital partners or entities who are looking to assess the value of a transaction or the acquisition for, whether it makes sense in whatever form it takes, you have to do the standard diligence, of course, on your physical plant and your census and the mix and the regulatory history and the PLGL and all the technological elements, all the regular stuff, which of course all ultimately go to servicing the stakeholders with the resident and the patient at the top of the list. But now with PDPM and and the value-based relationships, there's tremendous opportunity to not just play defense, but to be able to look at these shifts specifically. For example, if we're acquiring ALFs or we're acquiring CCRCs, or there's an opportunity to build an ALF or partner with ALFs, we know about the iSNP, but what about the IE-SNP, which is the model for the extended care that fits into an assisted living world? That's growing as well at a slower but an important rate. And as the acuity shifts increase and the population shift from the SNFs to the ALFs in greater frequency and the population agencies, there's no doubt in my mind that the IE-SNP is going to become a bigger player. So as you pro forma and as you do your diligence and as you research potential acquisitions and merger partners and so forth, are you using the existing data and the data resources available in the industry to include the possibility, the mandated responsibility for doing that? And so that's to your point about diligence. That's the part that we flow. We flow from standard diligence, moving from MDS to PDPM. What kind of opportunities are the acquirer using, or if they're not, how can systems and so forth be implemented to help increase not just revenue for revenue's sake, but for patient care first and foremost, and also to not leave opportunity on the table if it's appropriate to do so, and things are documented and recorded properly. And then to the more even the more contemporary part of how do we use our data, our collected data, and all of our information to position ourselves at the table on that on that therapeutic and care continuum in the most modern way, with the ACOs, with the value-based care entities, with the iSNPs, and the future iSNPs models up to and including IE-SNPs.
Great insight. Thank you for that. The next item we want to talk about just briefly is just transaction activity in general. In the last 12 months or so, based on published data, there has been a growth in transaction activity. Again, I think the demographics and other considerations are more buyers are entering the sector. Overall, again, this is based on publicly reported information. The overall price per bed, I'm talking about SNF beds here, is about 85,000, but there's a wide disparity in there. If you remove from that distressed assets, it increases to about 110,000 per bed. It's down from a peak of what was reported in 2022 of about 114,000. So the national average is what it is. It's something to be aware of, but there's wide disparity within that range depending on the market that you're looking at and the characteristics of it. So, really the pricing that we'll talk about as it relates to diligence is strongly influenced by operational risk, and operational risk mainly in three areas: occupancy, reimbursement, and staffing. And those three things are kind of all tied into what we're talking about today, and are impacted by by demographics, which we'll get into, and then the ACOs and the iSNPs and the variations in the different markets impact all those things. And that's why critical due diligence is critical, and strong due diligence and comprehensive due diligence is what people entering the space really need to focus on to be able to.
And Ray, let me just interject one point, something that you said before, which is spot on. The more things change, the more things change, the more they become the same, or the more they're the same. Specifically, I want to make sure I underscore the staffing component. Post COVID, or in COVID and immediately post COVID, obviously it was very challenging for operators to maintain minimum staffing requirements. That has eased up. Of course, the challenges are certainly still there, but it is easier than it was. But I think that when we talk about stakeholders, and specifically as we focus our conversation on diligence, with all the contemporary and modern things that we need to address that we've discussed, shifts in acuity, which impact the assisted living world and the value-based care world, et cetera, et cetera. The people who are taking care of our loved ones, the people who are taking care of our stakeholders, are our associates. And the ability, as the quote that I pulled up before referenced, the ability to invest resources into recruitment and retention is, and I'm not just talking about pay scales, I'm talking about programs I'm talking about, as you do your diligence, as you do your operational due diligence on a particular acquisition, are they doing it? If they've been successful, is it because of what they've invested in? How do we pro forma for maintaining that environment? Or if they haven't been as successful as they might have been, how do we invest serious dollars to make sure that that happens? That is the right thing to do, first and foremost, from the patient care. And from a business perspective, it will make for a good operational model. But I can't underscore enough what you referenced before about the associates and all this, the current legislation and so forth. It's absolutely critical.
Great. So to finish this segment, the takeaways are there's strong demand. We think that there's long-term growth and opportunity in this space. There's near-term, pricing pressure somewhat due to operational risk and some of the uncertainty that we'll talk about in the next slide. Uncertainty is where you hear a lot today generally, but it does apply to long-term care as well. So let's move on. We'll talk just briefly about a couple of regulatory updates that impact transactions and things to be aware of when you're doing diligence and modeling things out. The first is the federal minimum staffing rule. This was implemented by CMS in 2024. It requires a minimum number of nursing hours per resident, a 24/7 RN requirement. It was scheduled to be rolled out starting in early 2026, but this past April, a federal court in Texas vacated it, on the basis that CMS overreached in some of these requirements. I can tell you, and Alex can tell you that facilities across the country were very concerned about this requirement. Many of them don't meet it today and would be hard pressed to meet it if it did become implemented, particularly in rural areas. There's a lot of facilities in this country are in rural areas, and it would be very difficult for them to meet this. So the case is currently yeah, I'm sorry.
Oh, I'm sorry. No, please finish. I was like, just coming from the recent AGA conference, it was the talk of the town, the ability for operators to meet this. Potentially meet this. I think the sentiment is, as things are starting to loosen up a little bit and get a little bit easier, this could infuse a new sense of challenge and anxiety and the ability to render proper care to the patient. So it's definitely something to watch.
To the pandemic days, when it was very difficult to find staffing, and facilities had to use agency quite a bit, which increased their costs significantly and made it very difficult to operate. The concern is that if this becomes law and becomes effective, that you're right back in that area, which put huge pressure on margins. But as of now, the case is pending. The government did appeal it, so we don't know what ultimately is going to happen. Garfunkel Wild is always very good about putting out notifications to folks about developments that are important. So if you're not on our mailing list, this is a plug to make sure you join our mailing list, and you'll get those notifications in real time. The second regulatory thing that affects this area and relates to the uncertainty I was speaking about is reimbursement generally. The federal budget reconciliation, the big beautiful bill, has is expected to have significant cuts in Medicaid. I've seen some estimates of $100 billion or hundreds of billions of dollars over the next 10 years, which they're tightening Medicaid requirements. So any significant, we don't know how it's going to play out yet. A lot remains to be seen. But if there are significant reductions to Medicaid, that obviously is going to impact valuations. It's going to impact profitability of nursing homes. So it's something to really pay attention to. On the Medicare side, there's I think a 3% increase to the skilled nursing rate in 2026. But when you factor in costs and inflation, that's pretty much a flat increase. There's some thought that CMS may be aggressive in other areas and not necessarily cut rates, but still seek to claw back funds. And so overall, I think our takeaway. I'm sorry, go ahead, Alex.
Yeah, just before you get to the final takeaway, just something to throw in. Everybody's aware of the reduction of Medicare Part A and shift over to Medicare Part C. That rate is growing. I think I saw a statistic that Medicare Part C now constitutes, I think, 35 or 40% of Medicare reimbursement, and I don't see any reason why that trend is going to slow down. Certainly, it is depending where you are, there's a geographical element to it. But I would say that, regardless, that I think in terms of the diligence activity and transactional activity, the cognizance that when you're either performing or reviewing documents and information about a particular transaction, the acceptance that the shift is going to continue should be, on your right in the forefront. I don't see, I don't see that changing. I guess to my point, I didn't mean to interrupt. Ray, please, back to you.
Right. And I think, let me know if you agree with this, that the consensus is that, inflation adjusted reimbursement growth is going to be minimal to flat. And improving margins is going to depend on operational efficiency, case mix management, ancillary revenue optimization. And those are the things that we think operators should be focusing on.
100%. That goes to what we talked about operational due diligence, focusing, like you said, on the core elements of census and census growth. For the purpose of taking care of your patient and developing programs and offerings to make your facilities and your caregivers as attractive as possible to the referral market and to the patients. That's the core. Using and understanding the PDPM and the changes in the PDPM world to provide, of course, first and foremost, again, the best care, but to document that care in the most appropriate way possible. And then in the contemporary sector or the incremental sector that we're talking about, to understand the markets that you're going into or you're departing from or potentially moving into, or somebody that you're partnering with, to understand what are the opportunities in the value-based care world, in the ACOs, in the joint clinical quality initiatives with the other members on the care continuum, understanding your referral sources, not just as a partner who's going to refer to you, but how can we help them with their rehospitalizations, readmission rates, et cetera? How can we provide ancillary services to help them in the form of special units, in the form of case studies together, in the form of initiatives? All those things need to be thought of as operators, but as you move as being an operator from one market to another, what are the resources we have to allocate and look for in terms of that as a part of our due diligence process? Those things need to be taken into account. And I would say that it's an opportunity to do due diligence on yourself and your operating entity, to make sure that if you're not up to speed to doing those things as you're doing diligence on a particular transaction, to make sure that you're ready to help make the best for your stakeholders, your patients, and so forth, your investors, of course, too, and by leveraging those types of clinical opportunities, because they're not going away, and and they shouldn't. They're there first and foremost to to provide the best access and quality to patients. But from a transactional perspective, how do we use data, our teams, our associates, our culture, our strategy to help work with that and maximize the opportunities that are there? And it does require an expansion of the foundational thought process, not an elimination of the foundational thought process, but an expansion of the foundational thought process in ways that we haven't done before. And that will be critical to transactional success, given all the forces that are in the industry right now.
And so we have a few minutes left here on the due diligence. We talked about, we've kind of been speaking about it throughout, but incremental to what you would look at ordinarily in a transaction. What are the highlights you think an operator should look at entering a new market that is unfamiliar to them? And we were talking about the demographic analysis, looking at their referral network. What are the highlights in a couple minutes that you think are the most important takeaways from this?
I mean, you touched on them, and we've been alluding to them throughout. But of course, the referral market, certainly the staffing market, where there are opportunities, where there are pitfalls, challenges, what has been done, what has worked, what hasn't worked, provider relationships. And again, what we've been saying, how do all the players in a given market work together? All the provider players work together. What has worked? What hasn't? Of course, the standards are, like you said, census, regulatory history, P&L, staffing, et cetera. But I think they need to be looked at as a whole. The days of looking at, individual silo contract P&Ls and so forth, the financials that we look at when we do transactional due diligence tell a story. They always have told a story. The question is, are we looking in the right places and are we asking the right questions? Are we taking into account trends? And I'm not just talking about legislative trends and what bill is pending at the particular state. I'm talking about the impact in a way, especially in a post-COVID world. How do those trends and pending legislation affect the ability to hire, recruit, and retain staff, especially in a post-COVID world, especially where it's vulnerable in ways that it certainly hasn't been. It's always been vulnerable, but in ways that it hasn't been before. But I don't mean that in a negative way. I mean that in a positive way. I mean that when you come to your question, Ray, about what to look at, I think the critical takeaway, or one of the critical takeaways, is to look at opportunity. What kind of opportunities have been leveraged in terms of partnerships, use of data, strategic relationships with ISNIPs and so forth, and what hasn't been done yet? What has been left on the table? And I think it's incumbent upon the person who is, pursuing the transaction to recognize, not again doing due diligence on yourself, what data and resources and strengths do you have to look at the information that's available and say, oh, they haven't done this, we can, therefore this transaction it has more potential value than maybe anybody would have realized. And of course that's been done in the past in different ways, but I'm specifically focusing that opportunity lens in the areas of the acuity shifts and growth, the shifts in the industry, and of course value-based care. I think that would be my biggest high-level takeaway in terms of the standard stuff plus what is incumbent upon anybody pursuing these transactions that they need to do, given where we are today.
Excellent. I really appreciate that information. That's really helpful, and I think that kind of encapsulates everything that we've been talking about here today pretty well. We are out of time. If you can believe that, we've gone through our allotted time here, but these are all things that Alex and I could talk about at far greater length. We wanted to kind of hit the high notes today, and hopefully we did that. But we thank you for joining us. Feel free to reach out to either one of us after today with any questions. We're happy to answer them, and you can also, of course, reach out to the GW attorney you ordinarily work with. But again, we really thank you for spending time with us today. We hope this was helpful. So, Alex, thank you again for joining. I really appreciate all your great insight into this.
Oh, thank you. Thank you for having me, Ray. So it's like it's the good old days. It's great to be sharing a speaking position with you. And thank you for the opportunity to talk to these good people about a topic in an industry that I care and love very much for a long time. So thank you for having me.
Great. Thanks, everybody.